Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Jay Gragnani, senior market strategist at Nasdaq Dorsey Wright, to discuss asset class performance and ranking in today's market environment. Jay, it's great to see you as always. Welcome back to Trade Talks.
Jill, great to be here. Thank you for having me.
All right, you got it. In November, performing as it historically does, we're off to that seasonally strong period in the market. Tell us what's leading the way in some other perspective around the market action we see.
Sure, you're absolutely right. November historically is a positive month for the market, and coming off of September and October, which were volatile markets, months of the markets to say the least. Similarly, in that vein, those are also typically more volatile, weaker time periods for the market. Nonetheless, here we are in the month of November, and what we've seen a lot of so far this month of November, number one is a lot of stocks and a lot of sectors, almost all sectors, have been lifted higher by the generally rising tide of the market. There's only one sector so far in the month of November, as we're doing this, that is still in negative territory for the month, and that's energy. But every other broad sector out there that we track is in positive territory, and some in much more positive territory than others. For instance, the general trend and the general themes of growth, of technology, of consumer discretionary, those are the sectors that not only lead the market on a year-to-date basis, with it much thanks in large part to some of those mega large cap names, the big seven stocks that have really carried the indexes. But you've seen those lead also now in the month of November. After taking a breather coming into October, those stocks took a breather. November has seen a resumption of those trends that we saw unfold over the course of the year, really, and November has kind of been an extension of that. And so when you look at the market, it's been so far in the month of November, it's been the technology sector, it's been consumer discretionary right there at the top. And in particular, you drill down and you look underneath the surface, and semiconductors as a industry group has almost doubled the return of the broad technology sector. So semiconductors within technology has had tremendous performance, not only year to date, but that trend has continued into the month of November.
And Jay, if we take a look at asset class rankings, commodities coming in at number one, but really it's a tight race at the top.
It really is, and it kind of has been for a lot of this year, where you see commodities, international equities, and U.S. equities have been battling it out for that number one position. And those three asset classes are very, very tightly packed. And so on any given day, we might see U.S. equities move back up to the top potentially. Right now, it's commodities that's sitting in there. You've seen commodities pull back a little bit, and you've seen equities strengthen a little bit here recently. So you continue to see that battle for the top spot within Dolly, within our asset class rankings, as you mentioned. And Dolly is our asset class ranking tool. Simply dynamic asset level investing is what it stands for. And so we continue to see the more growth oriented asset classes, whether it's commodities, whether it's international, whether it's US equities. Those are the areas that have dominated the tops of the ranks in our asset class rankings this year. Whereas on the other hand, the other three asset classes that we evaluate from an asset class perspective, high level, are cash, currencies, and fixed income. Those three areas continue to be towards the bottom in the back half, or the bottom half of those asset class ranks. And so if you kind of break it down, it's really the growth-oriented growth-oriented asset classes that continue to hold on to the reins of leadership in this market as we head through November into the end of the year. And it's those lower beta, more defensive asset classes that are at the back of the train in terms of laggards from an asset class perspective today.
And let's take a look at the longer term trend of the S&P 500. I also want to touch on small cap as well, as we're finally starting to see some participation.
You're right, and small caps have certainly begun to come to the table, so especially in this month of November. And that's a positive sign. You're on the verge of seeing some pretty notable breakouts to the upside in some small cap indices and in some exchange traded funds. And we'll continue to monitor that and watch that. As we continue to see participation in the market from small cap specifically, that is a generally positive sign as we move through the market, as the market rally begins to broaden out. It's not just confined to those handful of stocks that have really driven the market, but as small caps, as mid caps participate in these market rallies that we're seeing. And that's what we've seen so far in November. As those areas are participating, that tends to bode well going forward for the market, as you just get participation from a much broader swath of the equity market. And so, that's something we'll continue to watch as a result of more participation that we've seen from these other areas, smaller and mid-cap type of stocks. We've also seen that translate into positive developments from a number of our technical indicators that we look at. Things like the percent of stocks that are in positive trends today, that number is much higher than it was, say, even just a short month ago. And so that tells us that as these stocks are rallying, they're not just rallying below trends and failing at areas of resistance, but the rallies that we're seeing from a lot of these individual stocks, they're actually creating meaningful positive changes on their individual charts, causing those trends in many cases to turn back to being positive. In the case specifically for the S&P 500 universe, we're approaching now a point at which more stocks are in positive trends than negative trends. We're not quite there yet. I'd like to see that number get up to above 50%. We're just below that. But that number has ticked up quite substantially here over the course of the past few weeks as this market has rallied into the month of November.
All right, Jay, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.